What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about the spot price of silver seeming to securely sit in the $24 an ounce range. I want to talk about a little bit of gold as well, but more importantly, I wanted to talk about why the market is continuing to crash. There are a lot of components, a lot of factors, a lot of catalysts. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos. Subscribe to my second channel for weekly videos. Get yourself some DYDSS merchandise to help support the channel. Come and join us in the Precious Metals VIP Club. I'm going to be going live tonight at 7 p.m. Eastern Standard Time, and I have a giveaway going on. Join before March 1st to get entered. And of course, go and get your 2 free stocks by downloading Webull and funding your account. Everything is linked in the description. So today is Wednesday, February 23rd, 2022. Spot price of silver as I'm filming the video is $24.34. It's up 26 cents or up 1.08%. Another rock solid green day for silver. Spot price of gold is $19.0580. It's up $7.30. It's up 0.38%. It's a fairly decent day for gold as well. And of course, the gold to silver ratio is in the 78-to-1 range. But again, that's as I'm filming the video, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. So today, I wanted to talk about quite a few different things. I wanted to talk about the silver. I wanted to talk about the gold, and that's exactly what we're going to do. You can see on screen right here, nice little selection. Some silver coins, some silver rounds, some silver bars, different denominations, fractional silver, 2 ounce, 5 ounce, 10 ounce, and then of course we have a little bit of gold on display over there in the upper right corner. But before we can even get into the money, I think we need to first talk about the currency, more specifically, why the market keeps on falling. So for those of you that somehow haven't noticed by now, this year has gotten off to a really rough start. And there is currently more fear, uncertainty, and doubt than we've seen in a while. In fact, the S&P 500, which returns 7 to 10% per year on average, is currently down 10% this year alone, and it hasn't even been a full 2 months. That's a year's worth of growth slaughtered in under 60 days. Fortunately for investors, the S&P returned 27% last year, but that doesn't take away from the fact that this is a really deep cut. Now, we all know that the tech sector has been carrying the weight of the entire market for the last 2 years. So, is this all because tech is down? The answer to that is yes, tech is down, but almost everything else is down with it. The blue chips are down, the rock solid, quote unquote, recession proof companies, even they're down, even they're taking massive punishment. Even the digital currencies are down. I mean, just look at Bitcoin, for example. It's down 28.5%, down over $15,000 from this time last year. So index funds are falling, the tech sector is falling, the blue chips are falling, the digital currencies are falling. The question is, why? Why is everything falling right now? Why has everything been falling this entire year so far? It's only been less than 2 months. Well, the general state of the workforce played a pretty big role. The recent jobs reports that have been coming out over the last couple of months have been showing us that we were missing jobs expectations, and at one point we were looking at an unemployment crisis. Although personally, I'm kind of optimistic about jobs right now, and that's because we're seeing a lot of people return back to work. In fact, I can't even think of a single person that I know that's still out of work. Everybody has returned, and a lot of those people have gotten second jobs. So jobs are returning, whether you want to believe that or not. And we're seeing a lot of people right now return back to work, and that's because employees, or one of the reasons I believe, it's because employees have had all the leverage this year. People have been asking for raises, and they've been getting the raises Because right now, companies don't have the time, the money, or the resources to hire new people and train the new people. It makes more sense to pay the current workers more money just to keep them. Otherwise, they'll just go somewhere else that pays more. But aside from that, it's hard to be optimistic about what else is going on. We have inflation through the roof, 7.5%. We're only a couple of weeks away from the next inflation report. I'm crossing my fingers it's not more bad news, but once again, it's hard to be optimistic about that right now. 7.5%, the highest inflation in 40 years. This has been taking a toll on the market as well. With the price of absolutely everything going up, we're seeing more people begin to go through more financial hardships. And it will likely soon lead to less people spending less money. Companies are struggling due to supply chain constraints, which are forcing prices up even higher. So if we get to the point where people eliminate spending on non-essentials, companies are going to take a massive hit, a bigger hit than they've already been taking. They're going to start missing earnings expectations, which could lead to laying off workers if they're not making the money that they're supposed to be making. Both of which are bad for the stock, by the way. Laying off workers and missing expectations. And during these times where more people are selling than buying, the market would take even more punishment. In addition to that, we also have a lot of people afraid of what the Federal Reserve is going to do regarding the taper and rate hikes. Now, the Federal Reserve, they try their absolute hardest to be as predictable as possible, because you don't want to shock the market doing something that nobody's expecting. So the current game plan is to keep reducing bond buying until the middle of next month. This has been several months in the works. And then at that point, begin raising rates after their March 16th meeting. But with the February jobs report coming out in about a week and a half, and the February inflation report coming out in about 2 weeks, a lot of people are nervous that we're going to be getting more bad news from the reports, which could, in theory, make the Federal Reserve take emergency action and essentially pull the rug out from under us in an attempt to get inflation under control, or in an attempt to prevent inflation from turning into hyperinflation, which, by the way, pulling the rug out from under us would shock the market. It would be an unpredictable thing that the Federal Reserve would do, and that's why they are trying to avoid that at all costs right now. But of course, if that were to happen, it would cause even more pain. Keep in mind, the fear of that happening is already causing pain. Imagine if those fears became a reality and the Federal Reserve ended up ending the taper sooner than planned and started to raise rates in larger increments than planned. Not good. Also, not for nothing, but even if the Federal Reserve doesn't need to take emergency action, even if they don't pull the rug out from under us, even if they stick to the game plan and remain predictable, the inevitable rate hikes are enough to hurt growth alone, because at that point, money is no longer going to be free to borrow. So companies will be expanding slower, and consumers will be consuming less, which is also not good. I mean, that's reality though. The market isn't supposed to fly straight up as it did last year. Companies are not supposed to grow for free like they did all last year. Consumers are not supposed to consume for free with borrowed money like they did last year. We're coming off of a year-long state of euphoria. Reality is not good for euphoria. So even though we're not supposed to be borrowing money for free, people have gotten used to this. Companies have gotten used to this. The market got used to this. So if you change that around, it's going to cause some pain. And then, of course, last but not least, we have the good old tensions between Russia and Ukraine. I'm sure we all know by now, but tensions have been building, not just between the two, but between other countries as well, as the possibility of Russia invading Ukraine becomes more and more likely. And if Russia invaded Ukraine, we would need to brace for impact, because that would likely turn into a war, which could snowball into something bigger and longer lasting than we realize. That's being priced in right now. People are fearful that this will turn into an all-out war. Not to mention, that would further disrupt the already disrupted supply chain. Once again, not good. So if you add up all of these components and factors and catalysts, you'll understand why the market has been falling for the last 2 months. And today is no different, by the way. Let's take a quick look at how the stock market is doing today. We currently have the S&P 500 down 0.58%. We have the Dow Jones down 0.42%. We have the NASDAQ down 0.87%. We're looking at red day after red day after red day when it comes to the stock market. And really quick, speaking of the stock market, make sure to go and get your 2 free stocks by downloading Webull and funding your account. If you refer 1 friend before the end of the month, you get a spin on the spin wheel, which gives you a chance to win a free share of Google stock worth over $2,000. And if you refer 3 friends before the end of the month, you're going to be given a guaranteed $150 worth of Apple stock for free. Webull link in the description. Time is running out. You have less than a week. But now, moving away from all the negativity and all the catalysts that are weighing on the market right now, moving away from everything that is causing pain and fear, uncertainty, and doubt, let's now talk about what some of my plans are moving forward, along with the silver and the gold. So, my plan, for the time being, is the same plan that I've been sticking to for the last couple of years. I'm personally not going to let world news, I'm personally not going to let economic hardships get in the way of me taking care of my financial well-being and making sure that I'm preparing myself for the worst case scenario, whether that be even higher inflation, whether that be unemployment, whether it be this, whether it be that. I'm taking care of what I need to take care of now. I'm going to stick to the game plan that I've been sticking to. I might re-strategize, reassess, reevaluate when confronted with new information. As the great Chael Sonnen always says, I have the right to change my opinion when confronted with new information. So as we get new information, I might change up the strategy a little bit. But overall, the game plan remains the same, which is to take care of my financial responsibilities and continue financial prepping for the short term and for the long term. Both are important, which is why I also stack a little bit of cash alongside the silver and the gold. But now, when it comes to the silver and the gold, we can see that the spot price of silver is still in the $24 an ounce range. It seems to be pretty solid in the $24 an ounce range. And we've also been seeing far more green days than red days, as I've explained in previous videos, and as I really lasered in on in yesterday's video, where I talked about trading one metal for the other, talking about the gold to silver ratio and when I believe would be a good time to do that, at least in my opinion, just what the ratio would need to be for me to consider trading. But I talked a lot about the gold to silver ratio yesterday. I talked a lot about the spot price, and I talked a lot about how silver has been seeing far more green days than red days, and gold, on the other hand, it seems to be about 50-50. Probably an equal amount of green days as red days, and on the green days, it's not up nearly as much as silver's up, typically, this whole year so far. I remember I checked a couple weeks ago, and year to date, so this year so far, silver has been outperforming gold. I don't have the chart pulled up in front of me. I didn't plan for that to be a part of the video, but now that I'm thinking about it, I'm wondering if that's still the case. I would assume that it is. If anybody can leave the numbers in the comments so we know, I would appreciate that. But when it comes to stacking the silver and the gold during these times, when the markets are going through a lot of punishment, or should I say the stock market is going through some punishment, I don't know how real estate will be holding up over the next couple of months, especially when rates go up. The digital currency market not doing too hot. Silver and gold, on the other hand, they're standing pretty tall. And the reason for this, I personally believe, is because the precious metals thrive in chaos. The precious metals do good upon bad news. In fact, good news is usually bad news for precious metals. When we hear that the economy's doing great, when we hear that this is not going on, or inflation is lowering, that's usually the time that silver and gold start to retract a little bit. And it's mainly because a lot of people turn to silver and gold as a form of combating financial hardships. During times of economic instability, they're just looking for a sense of stability. And I think a lot of people get that from the silver and the gold, especially the gold. People have always turned to gold as a way of protecting themselves financially. I mean, we're even seeing that happen right now. I mean, I thought a lot of the big dogs, the huge financial guys, I thought they were not really interested in physical gold. As it turns out, I can't say any names, but there's one person who just sold a massive amount of currency worth of stocks and is also selling a portion of his real estate holdings. And he put a big chunk of that into gold. I was very surprised by that. That caught me off guard. Never in a million years would I have expected that to happen, but that's just one guy. That's anecdotal. I'm not saying that's what everybody's doing, but it was interesting to see. But in addition to that, my silver and gold stacking game plan for the foreseeable future, when it comes to gold, I will set a little bit of cash to the side and I will save up for a gold coin. As I've explained in previous videos, I'm in no rush to get the gold coins. I'm in no rush right now. To be honest, I can go the entire rest of the year without getting any gold, and it wouldn't really matter a whole lot to me. When it comes to the precious metals, I'm going to stick to silver primarily, as I've been. I wanted to put more of an emphasis on gold over the last year or so, but the ratio just, to me, it just makes more sense to be focusing on silver right now. Now, for you, I don't know what's going on in your life. I'm not living in your shoes, so it might be different for you. It's different for everybody. But for me, silver just makes a whole lot more sense right now. So I will put a little bit of cash on the sidelines. I will slowly but surely save up for my next gold coin, but I'm in no rush to get it. I'm just going to stick to the 90% junk constitutional silver. I'll be picking it up from the local coin shop once a month or hopefully twice a month if possible. And I'm stacking silver in just an automated way. I walk in, grab the Washington quarters, fork over a little bit of currency, go home, toss it in the safe, and that's it. Don't even think about it again. That's the way I'm stacking. It's pretty repetitive. I get the same coins over and over and over again. There's not really much I can say about that because there's no real update. I'm continuing to stack the Washington quarters slowly but surely whenever I can. That's my way of playing financial defense, and I'm also playing financial offense right now because it seems as though, as I explained through the whole first half of the video, a lot of people are afraid to be playing offense right now. Look how red everything is. Red day after red day after red day. There's this popular quote, and it's probably the most overused, overrated investing quote that there is, which is, be fearful when others are greedy and be greedy when others are fearful. Right now, it's pretty evident. Everybody's fearful. So, during times like these, I personally feel it's my turn to be greedy. Last year, everyone else was greedy. They drove the market up through the roof, sky high and above. Now it's my turn. But I'm going to continue stacking the silver in an automated way. I would like to stack more gold, but now it's just not really the time, so I'll save a little bit of cash. I'll get there when I get there. But I'll continue stacking silver in an automated way for the foreseeable future, and That's just my game plan. That's just my strategy. And I'm very curious, everybody watching this right now, if you can head on down to the comments and let me know, what are your thoughts on everything going on related to the market crashing right now? The S&P 500 down over 10% this year alone, and it hasn't even been a full 2 months. Do you think that this will continue, or do you think that this is the bottom and we will soon be moving in an upward direction? Head on down to the comments and let me know. If you guys liked today's video, please hit that like button. Subscribe if you're new. Subscribe to my second channel, which is my backup channel for weekly videos. Go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs in a bunch of different designs. We even have the limited edition, luck has nothing to do with it, t-shirts and hoodies. Only available until St. Patrick's Day. Get one while you can. A portion of the proceeds are going to St. Baldrick's Foundation. DYDSS store will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month. I have one going on right now. Join before March 1st to get entered. Live streams multiple times a week. I will be going live tonight, 7 p.m. Eastern Standard Time. Come hang out. Deal alerts every single day when silver and gold is on sale. You can watch all of my videos early and commercial free. I post vlogs every single Saturday morning, and there are a ton of other perks as well. VIP Club link in the description. And of course, last but not least, make sure to go and get your 2 free stocks by downloading Webull and funding your account. They're going to give you 2 free random stocks just for doing so. And then if you refer just one friend before the end of the month, you get a spin on the Webull wheel where you have the chance of winning a free share of Google worth over $2,000 right now. And of course, if you refer 3 friends before the end of the month, they're going to give you a guaranteed $150 worth of Apple stock. If you don't want the stocks, go and get them anyway, sell them, and then you have some cash to go and get you some silver and gold if you want. Don't pass up on an opportunity. Time is running out. Webull link in the description. And I want you guys to head on down to the comments and let me know once again, what are your thoughts on everything related to today's video topic? When it comes to the stock market continuing to fall day after day after day after day, I can't even remember the last green day we've had in the stock market. It's been nothing but red. What are your thoughts on that right there? What are your thoughts on the S&P 500 being down over 10% this year alone? Not even 60 days in. Will it continue, or are we approaching the bottom and we'll soon be up from here? And then, of course, when it comes to the silver and the gold, more specifically silver, what are your thoughts on silver pretty securely, or seeming to securely sit in the $24 an ounce range? You think we're going to see $25 an ounce silver pretty soon? And then when it comes to gold as well, what is your stacking strategy? Are you focusing on the gold? Are you focusing less on gold, more on silver? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.